when we look at the provisioning at the moment, and we'll learn more over the next couple of days, I think it truly reflects the uncertainty that we still see in the market. I think we'll get more clarity when the government schemes, the furlough schemes, the cheap loans that are being provided to corporates and SMEs are being eased off. For the amount of the 400 billion, which is our base case scenario, we expect that to happen over the next 3 years. That is 2.5 times of what we've seen over the last 3 years. But also keep in mind, it's about half of what we've seen on the back of the global financial crisis. In light of what the ECB outlined earlier today, I think it's important to keep in mind that over the last decade, basically, banks really replenished their capital. And we think certainly in the base scenario, it's a severe shock, but they're able to absorb it.
How are you thinking about the risk of banks lending to zombie companies as a result of the central bank measures to get the banks to lend to these companies, to keep them afloat, certainly from a short-term perspective, to get through the pandemic? What are the longer-term effects going to be for the banking sector of lending to some of these companies that perhaps shouldn't be kept afloat?
Look, I think there is still uncertainty in who's cover which type of losses between the government and the banks. That also depends on the country, on how the schemes have been set up. But I think importantly, during this crisis, the banks are really proving to be part of the solution, which is very different to what we had a decade ago. I think we're seeing encouraging signs also for banks to collaborate with governments on things like collection standards. And they now need to push harder for reform in the banking sector and push hard for the European Banking and Capital Markets Union. It's now the time for a grand bargain, as we called it, where people need to get together, shareholders, policymakers, but also the employee groups, to really deliver the banking sector that Europe needs, which has to be more resilient, more sustainable, and putting customer first.
When you talk about the banking sector that Europe needs, speaking to bank CEOs, one topic comes up time and time again, and that is consolidation. And the big hurdle seems to be the lack of a single banking union in Europe. Now that we've seen a unification from European leaders on the recovery fund, does that increase the chances that we see more unity on the banking union front?
I think so. Look, they will have to work on cost, but that's difficult. We've seen over the last decade that the cost base for European banks was basically flat, despite a lot of cost programs that many of the banks embarked on. So consolidation will have to be part of the answer. And certainly the most recent political decisions will support that. When you look at the recent announcement by the ECB on how they will support it from a capital perspective, from a badwill accounting perspective, cross-border transactions will follow. There are some countries in Europe where intra-country consolidation will be high on the list, where markets are not concentrated. That includes Germany and Italy. Other markets are more concentrated, like France or the UK as well. And over time, we believe cross-border consolidation will have to happen in order to get the banking system in a more sustainable space. I think the key question is now, who moves first? And when we have seen one of these transactions succeed, we'll probably see a domino chain and others will follow.